With real estate, I can go in with no money out of pocket and buy $1 million, $10 million. Like I can buy big portfolios. And if that goes up the same amount as the stock market goes, if say it goes up 10%, that's on $10 million, right? That 10% is literally an extra $1 million for me that I put no money in. The stock market, everything in there I had to put in, and maybe I margin, right? Maybe I use margin, so I'm getting double the value. Whereas real estate, I have infinite value. It just is dependent upon the size of the deal you decide to do.
All right, but so when you say I put zero money, what do you mean? Because everybody's gonna tell you to make money, you have to use money.
Welcome to Real Estate Deal Closers with Anette, Talie, where we focus on the deals. Our guests are real estate closers who will share in detail the whole process from finding a deal to closing it, as well as strategies and tips to help you do the same. Here's your host, Anette, Talie.
Welcome to another episode of Real Estate Deal Closers. I am your host, Anette, Talie, and my guest today is Gualter Amarelo. Welcome, Gualter.
Thank you, Annette. It's awesome to be here.
I am very, very excited to have you. We have a friend in common, and he's been telling me for almost 6 months, you gotta meet Gualter. Gualter is awesome. And he's been talking about your mastermind and all the cool things that you guys are doing up there in Massachusetts. And so I am very excited that we're here today. So for those of you that don't know Gualter yet, let me tell you a little bit about him. He has been investing in real estate since 2013, and he focuses on portfolio deals. He is the author of Broke to $250,000 and Get the Deal, both books on Amazon. So go get them after this interview. So Gualter, welcome, and tell us, how did you get into real estate?
I love that question because it's the same way as everybody else. I wanted to get rich. I was an accountant. I was working for Johnson & Johnson, and then I worked for Coca-Cola, and I realized I just keep building money for these guys, and I really don't want to work anymore. And so I started researching Rich Dad Poor Dad, and I find that I'm not great at stocks. I'd make just as much as I lost, and I was day trading on my lunches, and it was real estate that came up over and over and over, that this is how people were building wealth. And so I got obsessed. I got absolutely obsessed. And long story short, I ended up selling my house, buying a multifamily, and I went through a divorce during all of my obsession with money. And I just kept buying house after house, but the divorce threw me off. So I went down to being worth almost nothing. In fact, less than nothing. Broke to $250,000 is no joke. I was worth negative $25,000 because the government and the world will allow you to do that. They let you go under what you were born with. And so at the bottom of my depression, at the bottom of the divorce, I thought, I'm either going to end everything or I'm going to explode and get huge, and then I'm going to teach everybody how to do it so that they don't have to suffer the way I did. And the way I put my wife at the time through a lot of stress and a lot of struggle, and that's what ended up costing the marriage. And I think that I've done that at this point. It was a very difficult time 5 years ago, but at this point I could say, yeah, I do. I teach a lot of people. We're on a mission to build 100 millionaires to keep helping people get to that next level. And people like you who are doing the same thing, supporting other investors and teaching other investors how they can get ahead. That's us paying it forward. So I have real estate. I wanted to get rich. If I were to be put it in small terms, that's how I got in.
Awesome. And it's so true. This podcast started because I wanted to share with people what I didn't know when I started investing. I was investing for, I think, almost 6 to 7 years before really going to my first meetup and networking with people and meeting amazing people like Mitch, like you, and, other people that I have met along the way that, are so willing to share and help you along the way. So I love it. I love it. And, when you were talking about your story and how you got to real estate, you started with almost the Bible, right? Poor Dad, Rich Dad, Poor Dad, which it was the one that I also read. And after reading it, I was like, okay, love it, but how do I do this? right? Like that it's not enough. That's when you start like craving for more. Like I want more, I want more, and you start learning about it. So that's awesome. And it was really a turning point to use. Like, do I end this or do I do it better the next time? And I don't do these mistakes I had made.
Yeah. It took me on a journey, like mindset is everything in real estate. And I had such a scarcity mindset. I really thought I had to sacrifice things in order to buy things. And I thought I'd have to sacrifice time and invest. And over the years now, I've discovered that people can have 5 children, can work 2 jobs, can be married, can still have multi-million-dollar portfolios of real estate and have tons of time, because it's all about mindset. It really does come down to what you believe you achieve, what you think about, you bring about. And I had just a very, very detrimental mindset. I really thought I had to work hard for money. I thought that if I wanted to make more, I had to put more effort in, more time in. And that was where I was just sacrificing. And I thought to have a great marriage, you had to sacrifice. And so I was making sacrifices, and I was asking her to make sacrifices. And it led to just a lot of time, effort, and sacrifice. It was like the way of my life. The more I tried to get more life. And it wasn't until I made that shift, I'd say in 2015, to start looking at a new way of living, a new way of acquiring wealth, a new way of building wealth. And I bought nothing in that year. In 2015, I went from owning 2 multifamilies and buying, one a year, to buying absolutely nothing. But then in 2016, I ended up buying 3 houses. In 2017, I bought 8 houses. And last year we bought 50 different units. So 24 deeds. No, it was 30 deeds, 24 condos. And yes, the rest were multifamilies. So like it progressed over the years, but now I work almost no time at all. And, we built a coaching program where we contribute and we give back. And every week I teach for free the 52 wealth principles I discovered after the 300 books that I read and all the coaching courses I paid for, and traveled across the country, meeting all of these, great investors like yourself and Rod Cleef and Gino and Mitch Jaworski and Mitch Durfee. And, there's so many amazing investors, Doug McGurk out of Florida, like that we've met. And they put it home that real estate investing is about deciding that you want to invest, meeting and surrounding yourself with people who are also investing, and doing it, just doing it. Right. It's easier than you think and harder than you think.
And something that you also mentioned that I think a lot of people fall into is like you were doing stocks and then you realize real estate. Why did you flip from stocks and to real estate? Because right now stocks are doing really good. So people are not really like, when you tell them real estate, like, I can make more money with stocks. But, to me, stocks are very risky. So tell me, what switch?
I love that, Annette. So you actually asked a great question. Well, the reason I switched was because stocks were not leverageable. And in this economy, you want leverage. In fact, Ken McElroy just put out a video about debt and using inflation to destroy your debt.
I saw that video. If you haven't watched it, go to YouTube and Google it. Incredible.
Absolutely. Credible video. And with stocks, I can leverage margin. So I can double my money. In fact, that's what I do right now. So I still have stocks. I still invest in stocks. I own some Tesla and I own some other companies, but what I do is I borrow against my own account so I can use double the money. With real estate, I can go in with no money out of pocket and buy $1 million, $10 million. Like I can buy big portfolios. And if that goes up the same amount as the stock market goes, say it goes up 10%, that's on $10 million, right? That 10% is literally an extra $1 million for me that I put no money in. The stock market, everything in there I had to put in, and maybe I margin, right? Maybe I use margin, so I'm getting double the value. Whereas real estate, I have infinite value. It just is dependent upon the size of the deal you decide to do.
All right, but so when you say I put zero money, what do you mean? Because everybody's going to tell you to make money, you have to use money.
Right. Right. Absolutely. So yeah, and here's the deal. I don't encourage people to go do no money down deals in the beginning, right? Like put some of your own money in the game, get some skin in the game, do 3.5% down, owner occupied FHA loans or VA loans or USDA loans, or even conventional 5%, right? Go in the game with some skin in the game. But at the point where you're putting 20, 25% down, you really can start, if the asset is good enough, right? Like if you're buying it with 70% ARV or 65% ARV and renovation costs already built into the project, you've got 30% equity, right? So a bank can actually leverage that 30% and not require you to bring the money down if you're doing asset-based lending or hard money, or building relationships with other investors and using private money to bring down to bridge the gap on the hard money or the other forms of financing. Or like we did on a deal recently, we did seller financing for the down payment. I picked up the whole portfolio with hard money, and I just asked the seller to bring 20% to the table as private money, and I just paid both people 12% interest. But like that works too, you know?
Right. So that's what he means when he does zero money. He's using other people's money, which is either the seller or hard money, or if you are financing at the bank and then you just worry about the down payment, and you can do that with hard money or private lending. Amazing.
That's OPM, right? Other people's money.
Other people's money. And that is amazing. Or, sometimes you can also do the Brrr method, where you buy the property and then you cash out and then take all your investment out, and then you have zero money in the deal, and then it's infinite returns, which is my favorite.
Yes. and yet you can actually, what's amazing with your strategy is you can combine that with other strategies, right? Like the condos we bought last year, 24 condos, we paid $840,000 for 24 condos that got appraised this year for $2.5 million. And we bought that portfolio with no money down. Obviously, we used the seller financing, and we raised some capital from investors, and then we used hard money. So we were into it with nothing. But this year we're doing a cash out refinance that's putting $500,000 in our pockets, and we're down to 5% interest. So we're paying off all of our investors who are in the deal, and we're getting a cash out refi. So like real estate, you can't do that with stocks. Nobody has ever said, hey, go invest my money for me. And then no bank has ever said, well, you know what, you did really good investing. Why don't you just take back some of your equity here, tax-free, and just enjoy having it. We don't care what you do with it, right?
Yeah, absolutely. Absolutely.
The Deal.
All right. So let's talk about the deal. What deal are we talking about today?
Well, we could talk about those condos, right? Those condos were ideal for what we like to do. And we're looking to do something very similar here in Tampa this year. So we picked up 24 condos, and I think you want to know how we found them, right? How do you find a portfolio?
So let's start with what type of asset. Was it an A class, B location? Tell me about, what was the
Girl, I am a C class investor. So anybody who isn't, they're lying, right?
Yeah. I mean, that's what you want. That's the C class that you can make into a B class.
100%. And so true C class means that they're not paying for heat. They're not paying for cable. So I buy potentially B class buildings, right? All the utilities are split. I'm not paying for anything, but they are run down typically, right? C class typically. This building was an anomaly. And even the appraiser now is looking at it saying, so what do you like, how can you justify the appreciation? And the seller was just in such a desperate situation that they let it go for pennies on the dollar. This was a B class building right off the rip, brand new renovation in 2004. Everything was brand new. The condo complex is in great shape, and the units were all brand new kitchens, brand new bathrooms, brand new walls, carpets, floors. So this was not what we normally buy. We buy things that they look like C class, and we got to go, do the carpet job and repair the kitchens and take it to the next level. This was an anomaly. This was like that ball, like home run.
Right. So how did you find this deal? How do you find this home run where the the seller is desperate that you can buy it, so cheap?
I like that question. So there's a book called Serve to Win, and it was written by my buddy Mitch Durfee. He actually is out of Florida. He was from Vermont, and now he lives in Florida. And Mitch wrote this book, Serve to Win. And what I've been doing for the last 4 years is teaching for free. I've been running a RIA in Massachusetts, and I've always shown up, and I've always offered free value and taught people how to find their own deals, taught people how to, get their own money. I teach a class called Get the Deal, Get the Money, Get the Attention, Close the Deal. And I bring other speakers in who just give a ton of value. And at this event, I told everybody what I was looking for. I said, this year, I'm looking for about 20 units, and they would look like this in this city. I was looking for Fall River. I wanted 20 units, and I want to pay somewhere between $40,000 to $50,000 a unit. And one of the people stood up and he said, would you buy condos? And in the past, my answer was always no. But something in my head said, you know what? You would buy condos at the right price, right?
Right.
So I said, well, at the right price, I could buy condos. What do you've got? And he said, well, I might have something for you. I think I've got 20 units that are condos around $40,000 each. And at that point, I was thanking the universe that I was open, right? Because I could have missed that opportunity. And my business partner jumped right over to him, started talking to him, having a little conversation with him. My partner's kind of like your husband. He's kind of quiet, like reserved. You're very professional, keeps to himself. But when he sees an opportunity, he jumps in. And he didn't have to talk to anybody else that night, just one person.
Absolutely. That's amazing. And, you bring a point that's very important. If people don't know what you're doing, they are not going to help you. But if you are constantly telling people what you want, then they are going to bring it to you. And, and I didn't know this until recently. I was very quiet about the investing and, didn't tell a lot of people. So when I started doing it more openly, it was after 8 years almost, people were like, what, what are you doing? Like they had no idea. So it's funny, how opening up and telling people what you're looking for literally brought it to you.
100%. Like that's the point, is speak and you shall receive, ask and you shall, the door shall be opened, right? Like it's in the Bible. Like these are principles. You have to put it out there. You have to let other people know what you're looking for in order for them to be able to bring it to you. And don't worry about people, telling you it's not a good idea. Even those people will still bring you deals.
Absolutely.
So go out and tell people what you want.
All right. So okay. So this guy, was he listing it or was he a seller?
What's interesting is he is one of our students. He's one of our just friends. He's just a friend of ours, an investor, and he's been in our community for a long time. And he's an investor who wanted to buy something, but this deal was too big for him. He'd recently bought a 6-family and 24 units was outside of his ballpark, hadn't figured out how to do it. And so he said, look, I just want to be kept involved. Like, just teach me what you guys do. I want to see how you operate. And for Ron and I, that was the easiest thing for us to do. We love teaching. And so, teaching him the process. Now, obviously afterwards, he looks at it and says, yeah, I could have done that deal, right? Like, had I known how simple it was, had I known everything, but he blesses us. He says, look, I'm glad I learned the process. He actually just bought 15 units himself this year. So he's, progressing. But we didn't spend any money on that. And normally we would have paid a wholesale fee somewhere between $20,000, $40,000 for a deal like that. But right. he just wanted the education. He wanted the information.
But that education, what he learned got him his next best deal,
That's right.
All right. So how did you, you kind of talked a little bit about it, but how did you negotiate the deal? So tell me about that process.
Absolutely. So negotiating this deal was very typical to other deals. We went in with a offer very close to what the seller was asking. We want 40,000 a unit. That's kind of where we're at. 40. The highest we've ever paid, I think, was 65,000 a unit. So we went in with a 40,000 offer, and we ended up moving down to about 35,000 per unit offer, which was $840,000, and that was just because it made sense for us, because we had to ask, right? If we didn't make that ask, we wouldn't know. And so after making the ask, they said yes, they would do it. We were supposed to write a $10,000 deposit check and put that money down, and we never did. The attorney never asked for it. The lender, the deal never asked for that money. And so we kept that money in our account, knowing at some point we're going to need to put it out there. And so we actually literally put no money in on this deal. We just said yes, 850, 840, and we had our $100 deposit down, and they never followed up on the $10,000 deposit. So I think 3 days before the closing, they said, "Hey, where's the deposit?" We finally wrote the check, right?
Amazing. So on what points did you negotiate those 5,000 less per unit? So did you have inspections and then that's how it happened, or tell me about that?
It really came down to the property management. We went after traditional financing with this deal. And with the traditional financing, they kept saying the condo association's defunct. They're negative, like they're behind. They're not paying their bills. We can't finance this. This is an unfinanceable building altogether.
How much was the entire building? How many units was the entire building?
The entire building's 32 units, and we were buying 24.
Okay, so you were going to be majority. You were going to be the association.
Oh yeah, we're the association. Yeah. But we had our association meeting yesterday, and all is good. So yeah, we were looking to take on a majority of this. And I told the banks, I was like, look, I've been managing property for a long time. We're going to be okay. We'll go in, we'll manage the association. I'll bring in a professional because I don't want to manage it myself. I'll bring in a professional and it'll be fine. And the banks, they wouldn't hear it, right? They couldn't be negotiated with. So we went back and we said, look, this condo association's defunct. There's no way to finance this. We're going to have to go hard money with this. We're going to want all cash. And the only way that we can close this is if you guys work with us, right? Because this is going to be a 12% interest deal for us, 2 points. So it's expensive. And they gave us a hard time with the pushback. They gave us a hard time that we asked for a month extension, which was secretly for us to go raise capital because we needed some down payment here. And it ended up working out where they said, okay, we just want to get this done. They sold it for what they owed on it, essentially is what happened.
Wow.
And they had bought this back in 2004. They had bought this for, I think, 3.5 million and put 1.2 million into it. So they were into this project, 5 million. It's just that over the last 15 years of owning it, they had paid down the mortgage significantly. And so we bought it at what they owed.
Wow, that was an amazing deal. So what are these units renting for? You got each one for $35,000.
When we bought them, they were renting for $650, $700, $750. We have now in the past year raised all units rents by $200. The first month we owned it was November. But then in January, we raised rent $100 on all units. And this January, we just raised rent $100 on all units. So we've had a few vacancies, which are great. The vacancies we've burned in turn. We actually sold those units. We sold one for $90,000, and we sold one for $106,000, and with almost no renovation. And the tenants are renting for $1,000 in our 2 bedrooms and $1,200 in our 3 bedrooms. And our studio we just renovated is getting $800. So we've gotten the rents to a point where we're much happier with them.
Wow, that is an amazing deal. It's more than 2% at this point, and no money in.
Oh, yeah.
No money
in. And a cash out refinance, and we flipped some of those buildings. So we've already put in our pockets about a little over $100,000 just from flipping.
Yeah, so I want to point this out to people that are listening if they didn't catch it. So you basically bought enough units to be the condo association, because to make any decisions in a condominium, you need to have the majority. And I've owned a condo in the past, and it was a nightmare. And I decided right there and then I will never buy a condo. But I've looked at a deal like yours, and it was buying the majority of the condos as well. And, they had a lot of debt. And, that's the reason that I didn't pursue it, because the condominium, was managed very badly. and it wasn't like you had much more majority that you could make all the decisions. But if you have the majority, then you can make changes, because some associations don't allow to rent. But if you are the association, then you can allow to rent. You just need to have the meetings and do it per law, but you can make the rules. Did you get any pushback from the owners?
That's right. And that's the owners always push back with us. So we raise condo fees, we raise the work that's being done, and we've done very good work with our tenants. But we're also tough, right? We go in and we just get rid of tenants that we don't like. So they occasionally will complain that we make money from our buildings instead of them living there. And I just have to remind them that, yes, I do. I agree with you. You're welcome. Be thankful that I want to build an amazing association for you here.
Yeah, I'm assuming that the owners, they didn't want the fees raised. And what happened with the ones that were not paying? Because I'm assuming that if the condominium wasn't doing good, was because a lot of owners were not paying.
Believe it or not, the owners are all paying. Like the owners are really good. There was one who was behind, and we told him, was like, look, give us the opportunity to buy your unit. We love that. If you want to foreclose, we'll run the foreclosure and then we'll buy the unit. Mm-hmm. And he started paying. And so, it's very simple. Like we're investors. We'll take opportunity when it's delivered. And if you want to stay with us and play with us, we'll make your condo worth way more than it is today, right? Just hang out with us, let us do our job, and we'll double the value of your condos.
Absolutely.
And that's been our commitment to the other owners.
And where was the location of this condominium?
This is in Fall River, Massachusetts, my hometown.
Man, I'm going to have to talk to you about this other one here in South Florida, because it's a very similar situation. All right. So what's the exit strategy for this? Because you talked a little bit about that you sold some and then you raised, the rent. So what's the exit strategy?
I like that. So we always looked at this and said, we want to keep 10 to 12 of these units. The rest we're going to burn and turn. So the idea is keep rolling this money. So anytime we sell a condo, we take that money, we 1031 it into a 5-plex or a 6-plex, or we sell 2 at the same time, but we can go get a 12 unit. And we've just used this as money to 1031 exchange. And me and my business partner, we like to take a little disbursement every year. So we take the money from the flips. We'll burn 2 or 3 condos, and that'll be money for us. That'll be income for us throughout the rest of the year. And then we'll just keep going back to buying more, stacking more property. It really is the most fun way for us to flip. I hate the purchase side, but I love the disposition side. I love owning property and I love dispositioning property. The purchase is, okay, they want my credit score, they want my PFS, they want all these different pieces. They want a firstborn child, and they want me to change their middle name now, so I got to go back and change the deed. Or
I know.
Like refinances and purchases are such a pain, so I'd rather do one big one a year and then disposition the rest of the year.
Awesome. But, on this specific case, if you go at 12 units, you're going to lose control of the condo.
Yeah, absolutely.
So they could change the rules on you, and they could stop renting or put rules on renting. How do you plan to do that?
At that point, we'll just keep selling out. At that point, where if they decide they don't want rentals, we'll keep selling out. We'll still at 12, we'll still be the majority owners. So we'll still have the majority share. So Ron and I will still both be on the trustee board. And so we'll still have control right up until the very end, unless somebody goes in and buys 2 or 3 units, in which case they also want renters. So the way we look at it is, we'll be fine all the way out of dispositioning our way out of it.
Absolutely. So I think the conclusion is that sometimes a really good deal might be a little bit out of your zone, right? Like you were not thinking about buying condos, but then this opportunity came up and you were open to it, and it turned out to be an amazing deal.
Absolutely. And that's not to say jump out of your comfort zone all the time. Get one niche, focus in that niche, and then get another niche that's close to yours. Because condos are very, very close to multifamilies, this particular building anyway. So it wasn't a huge stretch for us. But if I went and I changed markets entirely, or I shift over to, I've done one flip and now I'm a multifamily guy, that's a big jump, right? Or I've done one flip and now I'm buying a portfolio of 24 condos. you have to have a partner or a mentor or somebody who can keep an eye on you if you're going to make big changes like that. And there has to be money there. Like there really has to be a lot of money there for you to shift out of a niche.
Absolutely. Absolutely. Love that.
Productivity hack.
All right. So let's move on to the productivity hack. So tell me, what has been that one thing that you have implemented in your business that has helped you immensely to grow your business?
If I could pick one thing, it would be partnership. When I wrote the book, Broke to $250,000, I was all by myself, investing by myself. I got up to 22 units and I was ready to just pull all my hair out. It turned out God had a different plan. So what happened was I got a business partner, and he came in, he was an equity partner. He brought in money. And he promised me that he wanted to learn. Because I told him, I was like, look, I'm pretty much done with real estate investing. I've got what I want. I've built my wealth. And he was like, I won't do this alone. And I promise I'll do all the work. And I was like, look, I'll partner with you if you promise to do everything. I'll teach you. I'll do whatever it takes to teach you, to get you there. You bring the money, I'll do the education, and you promise to do absolutely everything in the deal. And I will guide you. Then I'll partner with you and I'll continue to grow this. And he has done that. He has done that on a level that I couldn't express. He does the flips, he does the property management. I mean, he manages our contractors and he manages our property managers. So he doesn't do much, but he does. Like, he's the one who gets all those problems. And so for me, I just go out and have fun. I find property. I get to teach. I get to train people how to find property. And so they bring me deals. And leveraging with a partner has been the most powerful. Even in my coaching company, I leverage other coaches. People think you're other coach. Like, if you're a coach listening, you think coaches are your competition. No, they're your partners. They send me referral fees when I send them business. They take care of clients. They do the one-on-one calls that I never want to do. I just want to teach. I just want to train. I just want to add value. And then when somebody wants deeper questions, I want to hand them to a coach who's willing to go and give them that deeper level of attention. Like Mitch Jorsky is one of my coaches. I love sending him business. He sends me a little referral fee. I love it. He's willing to go and sit through the calculator and show them how to evaluate deals. And to me, I'm like, bro, like, I just want to tell you what's possible, right? Like, this is how it's done. Like, go talk to somebody else, get a coach, get a realtor, and get a wholesaler together and let them guide you. So leverage was partnership. And to this day, it's partnership. It's joint partners, joint ventures.
That is amazing. So how did you vet this partner? Because I think a lot of people get burned with partnerships and that they decide to go solo and they decide, I don't want to do this again. So how did you find your partner, and what did you do to kind of vet him and make sure that it was going to be a good result?
I like that. So me and Ron, we met on Bigger Pockets, and for about a year, we just meet up for lunches. I think we met up 2 or 3 times for lunch, and I brought him. He got his real estate license. I was building a real estate team at the time, and so I brought him in, and he worked with me for a little while. He kept telling me he wanted to buy deals, wasn't pulling the trigger on it, but I liked him. He was ethical, he was honest, he was moral, and I could see the way he would do a transaction. He'd get nervous if something seemed like it wasn't going to be done right. Like, he had to do things the right way, and that was important to him. And he wanted to take care of the client every time. It was very important to him that the client was always taken well care of. Now, Ron hates agency. He hates being an agent. He'll never do it again. He occasionally will list a property when I'm like, bro, like, can you handle that? But he'd rather send it to my father or one of our other agents. And the way he did it, it was the morals, the ethics. And he was with the military for 17 years. So if you have high level security clearance with the military, they've already vetted you also. So there was a couple of things, and I just liked him. I liked the conversations we would have. We would be talking about things like, how do you build this? Or what's the ideal way to invest? What's the ideal way to get somebody through a transaction faster? How do you make people feel comfortable when you're doing something so scary as real estate? Like, we could have those conversations together. And that really was where I started to like this guy, and say I could work with this person, but I still was not open to partnership. My mentor told me I needed a partner. That's what happened. Yeah. And he actually, so we both worked at the same brokerage. My mentor, Tom Caffarella, was running Cameron Real Estate Group in Ocean City Development in Massachusetts. And he suggested to me, why don't I partner with Ron? And, I was a team leader and I ran this brokerage. I ran my own office in Fall River, and Ron was one of my agents. And I told him, I was like, you know what? I haven't considered it, because I was asking him, how do I get more money? And he's like, Ron's sitting on a bunch of cash. Why don't you partner with Ron? And it was that conversation kind of opened my mind to partnering, because he has two partners, right? Tom had two partners that he works with, his best friend and then his friend's father. And that kind of opened it up to me, seeing somebody else be successful in partnerships and being 100%. He loves paying his partners. He says it all the time. I love paying these guys. It's a part of what I do. Couldn't do it without them.
Awesome. I love it. I love it. So make sure that you get to know your partner before you sign those agreements. Like you met your partner and you talked to him for a year before you actually pulled the trigger and decided to partner. So I think that's very, very important. All right.
And all my current partnerships are the same way. We've known each other for a year, 3 years. Yeah, absolutely. And we work together on other projects without strings attached. So yeah. Awesome. Good advice.
Yeah, and you can do like one project together, test it out before you go full blown into a partnership. Like you can just create a quick LLC and do one project and then decide. So that the damage is a little bit contained if it doesn't work out.
Yeah, I like that. Yeah, join a club together, right? Join a mastermind together, or join something where you can build together and see how the other person, it's like a stress test, right? Like for us, a lot of my partnerships now came from this coaching company. I said, hey, can you be a coach? Would you consider it? And then we all get together once a week and talk about how to improve this company. How do we build a 100 millionaires? How do we get to that next level? And seeing how they react, I'm like, man, I'd work with this person in other things, right? Seeing the way they step up, seeing that energy, seeing that intensity, that they went above and beyond, right? Like if they'll do that in play, right? Like just volunteering, charity work, right? If they'll do it here, they'll do it when there's money on the line, right?
Absolutely. Absolutely.
Expert tips.
All right. So now we are in the part of the show where you're going to give me 3 expert tips. And Gualter is going to give us today 3 expert tips on how to find portfolio deals.
Excellent. So portfolio deals are the way I would suggest anybody who's deciding to scale up invest. I have a strategy that involves double your income, double your net worth every single year until it's satisfied. And the only way to do that is portfolios. You can do a bigger deal each year simply by adding the size of the portfolio. So first step is think larger, think portfolio, think, what do I need to accomplish this year? That is your first step. Set the goal of how many units it is, whether it's 5 units or 10 units, or like some of my partners now are 100 units. You're not going to get 100 units without a portfolio, right? So if you're looking to flip 12 houses, can I buy them at one shot? So think portfolio, think how many units you need, write that down. And then once you've got it written down, step 2 is go out and talk to wholesalers and talk to real estate agents. If you're not talking to one a day, you're missing out. That you should have at the end of the year 365 wholesalers and real estate agents who are hunting for your particular portfolio. If you're in Fall River, Massachusetts, I hunt for 3-family portfolios, because if you own a 3-family in my city, you tend to own 6 families also and 12 units. So we all started with that 3. And then eventually we bought other bigger things, but most investors have a hard time selling their 3-family until they're ready to sell the rest of their portfolio. So wherever your community looks like, you want to find the people who are digging. They're in the ground hunting for deals all the time, and let them know you're looking to buy 20 units, but I would buy a condo or a single family that looks like this as long as the person owns other stuff. And start scaling out with that conversation. So first, think portfolio. Second one, find the people who deal with people who have portfolios, which is wholesalers and real estate agents. And the third one is build your list using a real estate agent or using another source like listsource.com. Build a list of the top 20 to 100 people who own the most real estate in your city and go talk to them. become their best friends. It's called the Dream 100. And when I started, I focused on the people who had the most wealth in my city. And I went out and I said, I'm going to become their best friend. They didn't know it. They had no clue how close we were going to get. But I had every intention of knowing them, knowing their family, knowing their issues, knowing their problems, and then solving as many of those problems and issues as I possibly could. People ask, how do you find a mentor? Dude, just find somebody way bigger than you, and impossible to ever have that relationship, and then find a way. If I would like stalk their Facebook pages, find out where they ate, find out where they hung out. I'd memorize their names. If somebody else mentioned that they saw them somewhere, I'd be like, where was it? What time was it? What day was it? Right? And I would show up at those places. I find out where the people who had what I wanted, the people who owned portfolios, I found out where they hung out. And I hung out there. You know, I spent the money to be in cigar shops. I spent the money to be in country clubs. I spent the money to be at the restaurants that I knew they would be at, the restaurants they just opened. You know, I'm connected with whatever business I knew they had. I'd go and I'd change my entire life to service whatever they were using and become one of their best clients, right? I have a dedication to surrounding myself with successful people who have what I want, and then adding value. You know, one day you will sell your portfolio, and when you do, you'll sell to me. That's a
awesome.
belief system.
I love that. And you know what? I was watching the Undercover Billionaire, the new show on Discovery, and Grant Cardone was there, and he was saying exactly the same thing. You know,
Yeah.
who's got the money, and we're gonna be best friends.
That's right. He said that when he was talking about the commercial real estate investor. He said, this guy doesn't know, but we're about to be best friends. And that's been the secret. Like, and it creeped me out when I was younger. I'd be like, man, like, it's kind of creepy that I really want to be a stranger's best friend, but it's worked out so many times. And I really have added so much value to their lives. Like, you know, I may have been this annoying person who just came into their life in the beginning, but my mentors now, they're like, oh, you know, I can call on Gualter for this. I know Gualter will go do this for me. Like, he has the network. He can make this happen. So before, you know, yeah, you get uncomfortable thinking, okay, I'm going to become this person's best friend. You know, what if they want me to do something that I don't want to do? Well, fuck, there's other people, like, leave, you know, sorry about the F-bomb, but there's other people you can go and be mentored by, but ask yourself, you know, can you forgive them for that one piece and take on all the good that they have and learn from the good? And, you know, yeah, I picked up cigars, right? I still like cigars. Like, now it's one of those things that I have them with Mitch Jorsky when Mitch is up in Boston, or when we're down here in Tampa, you know, have a cigar, and who knows who's going to stop by. I've been in cigar events, and this, you know, I always tell, and this is secret. Okay. Last tip, right? Always tell the bartender or the restaurant waitress or the owner, who in here is in real estate? Who do you know who's in real estate? And if you see them come in, can you connect me, right? Just connect me with that person. Especially if you're going to be at the bar all night at a networking event or something, just go to the bartender there and tip them well and let them know, hey, I'm looking for somebody in real estate. Who do you know? Who do you know? Which one of your regulars? Are any of them in here right now? And they always, real estate people talk about it a lot, and people love to remember those people. And so it's how I met one of the best commercial lenders I've ever met. You know, this guy it was the most weird guy at the bar. He said, yeah, you guys, what are you into? And we're like, real estate. It's like, oh, there's this guy who always comes in here in real estate. And if he comes, we're like, hey, if he comes in, let us know. And we bought him a beer, and we thought, you know, nothing of it. The guy came in, and that guy brought him over to us and introduced us to a commercial lender who's licensed all down the East Coast. And such a powerful relationship that, you know, that tactic works everywhere. Ask for what you're looking for.
Absolutely. Love it, love it, love it. All right, guys. Thank you so much, Gualter, for this. So where can people find you online, and, you know, how can they connect with you?
I love it. Great question. Thank you so much, Annette, for the opportunity. I am on Facebook 24/7. My name is Gualter Amarelo, spelled Gualter Amarelo. I wrote the book Broke to $250,000 and the Underground Playbook for Getting the Deal, Alchemist Nation's book for finding deals off market. You can go to gualteramarelo.com. You can get the book there, or just go to Amazon, type in Gualter Amarelo, and I am the only person who shows up on Amazon with that name. You can find both my books there. The Audible book is coming out for Get the Deal, but Broke to $250,000, I did record the audio myself. So you can go and you can listen to it. In fact, I added an entire extra chapter in that book on the audio version. So if you bought the solid version, I appreciate you, but you're missing out if you haven't bought the audio. And I do read it myself, which is time consuming and painful. So please write a review on Amazon, and thank you for listening.
Love it, Gualter. Thank you so much. So if you are enjoying this podcast, make sure to like and share it with other people. And, you can write a review on iTunes or subscribe to our channel on YouTube. Thank you so much, guys.
This was Real Estate Deal Closers with Anette Talie, brought to you by Talie Investments. We hope that you enjoyed this episode. Our goal is to provide amazing value on your real estate journey. Connect online at www.talieinvestments.com, where you can find this episode and more. Did you like this episode? Subscribe, like, and share.